Oh my gosh, part of me thought that the stock market could never have a down day again. Yeah. You're watching the Daily Stock Market Brief. My name is Michael Silva. Today's show is going to be quick and to the point. If you're new here, welcome to the channel. We use technical analysis and intermarket analysis to get a good idea as to where the market might be headed. In today's show, we're going to go over some indices, some charts that look pretty interesting to me. And then I'm going to talk about some positioning that I've been doing in the conclusion section. So let's just go ahead and hop into today's show. Alrighty, welcome back. We're going to start here at the market dashboard and then work through the charts just to get a good picture as to where the market's at right now, and then kind of a good idea as to what we can expect for the remainder of the week. Energy took the top spot there in the sector. It's about time. I did see that this was potentially going to be taking place. Finally, we got a move of substantial size here, 2.78%. Not that bad. I actually exited my energy position just because of the fact we're starting to see these sectors and the S&P 500 slowly roll itself over. Now, commodities in general today, like copper, did outstanding. The CRB index did outstanding. Energy and oil, they did outstanding. So I'm going to give you my thoughts here on the energy sector and why I might be entering back in. But I wanted to make sure to capture in some of those profits and then kind of give it a little bit more time to decide we're at this specific key level. There at the bottom, we had technology. When I like to look at yields with technology, because when yields were on the ramp up, technology was taking a bit of a breath here. Yields didn't do much today, and technology clearly was the worst performer of the sector. We did have Coinbase launch today, and holy moly, talk about just some crazy price action. It was just priced significantly high, and it might go back up and reach that all-time high again. I wouldn't be surprised, but talk about a huge move at the beginning of the day and then just completely rolled itself over. I don't have that chart in front of me, but I can only imagine that we have a lot of FOMO buyers in that upper wick if you pull up that daily chart. Now, when I look at energy, something that I want to call out here is it kind of broke through this trend and we closed right on the 20-day moving average. So we did find strength from the 50-day. I do like the volume coming in. The price percent oscillator is still bearish at this particular point in time. But if this is a full measured move, I would imagine that it would break right through 53 here eventually. But we're at the early stages, and this level right around 50 to 51 still has, it still has to confirm a break above that. And we need a daily close above the 20 to give me a little bit more confidence. So strong move overall. I took my profits from this trade. Another reason why I'm kind of just postponing this trade for a moment is the oil chart right here. Just an amazing day, up 5% for the day, but I wanted to call out a possibility here of what could take place. And before I see it, give some confirmation, that's when I'll make the move. But I do like the bullish crossover here taking place in the price percent oscillator. I like the context overall, and this breakout of this previous resistance does tell me that we can go to this all-time high. However, I do want to call out 64 is a level of resistance that we need to pay attention to. So I exited, obviously, my XLE position because I think that 64 has the possibility to hold as an area of resistance, and it might go back test or might break down further. So that would be just a couple impulse legs there. So you move up and it goes boom to the downside, boom to the upside, doesn't break to an all-time high, and then comes back down for a lower low, and then perhaps we get that move to the upside. So that's a possibility, and that's the reason why I kind of scaled out of that position. But if you look at 64, it was resistance here. When it broke above, it held as support multiple times throughout and then really strongly flushed through it. So that big flush to the downside makes me think, okay, when it breaks that level, that held as support, we had a lot of sellers. So I'm assuming that there's a lot of potential sellers still within this area, so it could act as a wall. I don't know yet for sure, but you got to give the bulls somewhat the benefit of the doubt here just because of the overall context and this big strength candle coming in right here. So I'm going to give it a couple of days here, maybe just one day, just to see how things play out. One other thing that I'm kind of keeping an eye on here is that the dollar did drop down to the 50-day moving average, which we had mentioned, and that could very well act as an area of support, or at least a small portion of support. Now, when it came up here, that was right around the time we broke out of this 4,000. You can see the dollar rolled over, the S&P 500 broke out. Now we're starting to see potentially a bounce here in the dollar, not to say how high and not to say how strong it could be, but it could be a short-term bounce. It might not bounce at all. The overall trend is bearish and it has been moving down, but this move to the downside, you can see moves to the downside and it bounces up and then heads lower. So you got to be prepared for that. And if we do bounce up, that could put pressure right here on the S&P 500 where we see it head down. Now on the weekly chart, I don't have that in front of me, but I will be talking about a potential inverse head and shoulders that's building on the weekly. It's very, very early to determine that, but you kind of see this left shoulder here actually head and then potentially building out. But on the weekly time frame, I'll show it out a little bit better. Now, as this moves down, that's good for gold, good for silver, but we're kind of coming into this area of support. And when you look at that, gold has just been chopping back and forth. We're still holding above 1700. We had some confidence yesterday, but it wasn't above the 50-day moving average. And then we've reversed that confidence once again. It's just a hard time to be positioned in gold right now. If we start getting above the 50-day moving average, I think that's going to provide us some strength, and hold 1750 above there would even be better. But right now it's just kind of in this lull. I do like the silver trade a little bit better here. I'm still positioned in my miners, and if the dollar, heads up or, bounces from this area, we might see some weakness here in silver. It's a possibility, but we did break out. We saw a little bit of an update today, only 10 cents, so nothing too crazy. I'd like to start getting above this and above the 50-day moving average to really kind of just give that extra boost of confidence to the miners and to just the overall price of silver here. I am looking at some long-dated contracts, some option contracts that I'll go over probably in another movie here in the near future too as well. Now, if we take a look at the SPY, we called out this rising wedge. We did break down from it, but it wasn't like, a crazy amount of selling that took place. We held it around the 50-day moving average. So if we continue to break down, I'd say right around 407, this gap fill right here could act as an area of support. We have so many gaps below us, and it's just something that we need to be mindful of and be careful for. When we look at the daily time frame, right, we came into this area of resistance. We were overbought. We looked at some of the other indicators. This kind of makes sense. We're going to see a down day eventually. The down day, though, it's not that crazy. But what I want to call out here is the volume, okay? So as the ramp up took place, it was doing so on not really all the greatest volume, which makes me think that, okay, this big move, there's probably not all that much support in there. So an easy drop to around 4,000 could very well happen within the week to come. I don't think that we're going to see anything that crazy take place this week as we're coming into option expirations, and then also, we got VIX Crush Friday coming up. So perhaps, we stay above the 4,100. I mean, anything could happen at this point, to be quite honest. But, it just, in the weeks to come, I wouldn't doubt a potential connection to around 4,000 to the bottom of this channel or the 20-day moving average. So I'll keep my eyes on that. Another thing I want to call out here is the VIX. The VIX filled this gap back in February. We do have a gap below that as well that we got to be mindful of, but it's still within this tightly wedged pattern right here, and we do have gaps above us on the daily time frame and also the 15-minute time frame, which would suggest that we could potentially go and fill those gaps. Quick little spike of volatility there could very well be possible. When we look at the S&P 500 next to the VIX, a little bit longer term here, which I'll go over more on the week's close, but you see this falling wedge, which is bullish for the VIX, but if the VIX is bullish, that means the S&P 500 could be bearish, and you can see here it's just tightly wound up in this rising wedge, and you could also see that, on the daily time frame that we kind of pointed out right here. So not the greatest structure that we're seeing with all these gaps and the VIX kind of coiling itself up pretty tightly, but like I said, we have some interesting things that could potentially take place this week. Like I said, option expirations. We have VIX Crush Friday. So it could be just a relatively calm rest of the week. And that's kind of what I would assume is taking place. So when it goes to investing, trading, or putting on positions, just make sure that, you're very aggressive with either one, pulling profits, or that it makes sense from a risk versus reward standpoint. Because, going long in certain environments like this, is a little, it's not sketchy, but it's just a little bit dangerous. So you have to be very, decisive and very picky when it comes to specific stock setups. You don't want to just kind of throw caution to the wind in these areas. When I look at the daily time frame for the IWM, still kind of rounding itself off here, loss of momentum, negative divergence in the RSI. We had a little bit of an update today, though, on the IWM. We created somewhat of a shooting star pattern. Don't want to forget that, people are saying that this is Head and Shoulders is rolling over, but this could very well be a bull flag and we could be breaking out. And, anything's possible, right? So if that does take place, okay, then we go to new highs. But as it stands right now, it's just kind of consolidating sideways and a little bit too hard to determine its direction at this particular point in time. So I don't see the trade opportunity within the IWM right now. Now on the 30-minute time frame, 227 is that area of resistance. You can see there's resistance here, resistance, resistance, and then came back up and acted as resistance and moved down. So potentially if we get above that 227, we can see probably a pretty quick shot to around 230, 231. So, that could be a potential opportunity there if you want to catch a position to get a couple dollar per share move in relatively a quick period of time. Now let's look at Qs. Technology had a weak day. Now this is a little scary here, so be very careful here, okay? We broke out. This right here could very well be a false breakout, bearish engulfing candle, filled that gap that I forgot to remove from the chart, all right? And it was on increased volume, more volume that we've seen in previous days. Could be, people call this a prairie dog because it pokes its head out right here, then quickly gets reversed on higher volume. I don't think that we're going to see a monster sell-off unless if we get continued increasing volume here. So just be very aware if volume starts to pick up early and it carries on for like tomorrow, this could be a very easily corrective move, potentially to fill this gap and even potentially, come back to backtest these areas down here. Like I said, this big move right here wasn't done on high volume. So it tells me if volume picks up, that all can get wiped out very quickly. All right, so be just very careful for that. It's no guarantee. This could be just consolidating, but just by looking at this candle here, that's kind of bearish. You see increased volume to support its bearishness. Then this move right here is not supported by a lot of volume. Oh, just be careful at this point. And this also, we'll wrap up into the conclusion right here. This kind of makes me potentially think that this big move that we've seen recently in technology, as the yields, did I bring the yields up here? Let me see, did I bring the yields chart up here? No, I didn't bring a yields chart, but they are relatively flat and rounding off. Could potentially mean to me that this move in technology was very short term. Now, this is completely speculative, all right? But if it is, because you got to understand yields right now, they have backed off from their spike high, but they haven't really sold off. All right, so that could mean that they're consolidating for another run up higher, which could be very bad for technology. All right, so that is a very strong possibility that we need to be mindful of. We need more time to decide and to see what's going to take place. You need to be very careful in this environment because we've already seen, a monster run up in April, and based off seasonality, we also get a pullback mid-month to even the end of the month or in even May as well. So with all that said, that's all I got for you on today's market brief. If you got any questions, you can leave them in the comment section below. I try to get to them, but I will see you back tomorrow. Have a good day.